In the metals quadrant, taking a look at the March copper futures contract, which had a pretty weak day. We had a small gap lower of about 22 basis points on the high today. It was 3.8975, with the close yesterday being 3.9060. So a little bit of a gap lower on the high today. On the low, 3.845. That was down 1.56%, and we finished the day almost at those lows. This was a pullback for the second consecutive session. Copper's dropped two sessions in a row now, and it posted the largest single day percentage loss since December 4th, actually. From the low close on January 17th to the recent high close on January 30th, copper had risen about 4.7%. That's over 9 sessions. And in the last 2 sessions, copper has now dropped 1.5% of that. Copper's also working on a slightly negative week with only 1 session left to go, and that would be the first negative week in the last 3. We have the FOMC effect going on here. The market's disappointment in the FOMC's post-meeting stance shows up in copper. Rate cuts mean lower overall rates for business loans, both domestically and globally, because U.S. yields can tend to leak globally through the financial system. And that means more growth, which means more use of copper. But if you look simply at yesterday's trade, the slump that we had yesterday in copper, you'll see that the high for the week was made yesterday before the FOMC meeting, and that was the highest price level we'd seen since December 28th. But then post-meeting, we closed lower, and now today we've got some follow-through to the downside because the meeting just wasn't as dovish as the market wanted it to be. Now you look at the way the yields fell, 2-year down 7 today on the yield side, 5-year yield down 11, 10-year yield down 13, and 30-year yield down 12. In 2 days, the 2-year yield, not the price, yield, is down 16 basis points. The yield on the 5 years down 20 basis points, on the 10-year down 20, and on the 30-year down 18. So that's a weakener for copper, as well as the dollar having its worst day in the aggregate since December 27th. When you look at it, the yield, when you look at what happens in yields, that makes sense. So you're not getting that sort of inverse relationship with the yield side of things and the dollar side of things. You're getting the opposite of that.